Hey there and welcome to our channel. In today's video, we're going to be talking about a fintech trend that's gaining a lot of momentum lately, the security token offering, or STO for short. So, what exactly are security tokens? They're essentially an upgraded and highly regulated digital version of traditional securities, and they represent a share of a company or an asset, such as property, fine art, or investment funds. Security tokens are becoming an easy and relatively inexpensive way for entrepreneurs to raise capital, while offering investors a secure and transparent direct investment in a company. One of the reasons why security tokens have revolutionized the way capital is raised is due to the fact that they're financial instruments that show ownership information on the blockchain. This helps to protect the tokens against fraud and misuse, making security tokens faster, more accessible, and less expensive. There are three types of security tokens. The first is equity tokens, which are similar to traditional shares and represent the shares issued by a company. Owners of equity tokens are entitled to a share of the company's profits and voting rights. The second are debt tokens, which are debt instruments that include real estate mortgages and corporate bonds. Debt tokens represent capital raised through debt, and they can be compared to a loan to the issuer. Owners of debt tokens are generally entitled to the repayment of principal and periodic interest. And thirdly, asset-backed tokens, which represent the ownership of a specific asset, such as real estate or commodities including oil, gold, or crops. Blockchain technology is particularly important for the commodities supply chain because it helps to simplify transactions, reduces fraud, and makes it easier to track and monitor asset ownership. There are 5 main reasons why security tokens are becoming more popular with companies and investors. Firstly, companies that want to raise money through a security token offering have to comply with regulations and disclose important information about their business, increasing transparency and accountability and reducing risks. Secondly, smart contracts and blockchain technology ensure that the processes are transparent, secure, efficient, and fast. Thirdly, security tokens are backed by real-life assets, which makes it easier to assess their valuation. Fourthly, security tokens use fewer middlemen, such as lawyers, brokers, and banks, which reduces costs, makes the processes more efficient, and minimizes the sources of error. And finally, security tokens offer fractional ownership, which opens up the market to smaller investors and brings additional liquidity because the tokens can be traded 24/7. And with mobile apps, trading is becoming simpler and more convenient. It's important to note that even though security tokens are a great method to invest, you should always research the companies and projects you want to invest in because the basic risks for investors are still there. If the company fails, the investment also fails. However, security tokens are an ideal way for many startups to raise capital. Instead of relying on expensive venture capital funding or angel investors, companies can use security token offerings to easily and securely access the capital market for a fraction of the traditional cost. This means that even small investors have the opportunity to invest in up-and-coming companies and benefit from their potentially significant increase in value. That's it for today's video on security tokens. Thanks for tuning in, and if you have any comments or questions, feel free to leave them down below.